The Invesco NASDAQ 100 ETF, ticker symbol QQQM, is a fantastic growth ETF that has nearly doubled the returns of the S&P 500 over the last decade. It has a total return of about 420% over that time frame. A quick note, while QQQM has only existed since October of 2020, I will be using QQQ for the total return history in this video. The only difference between the two is a slightly different expense ratio. Invesco knew that in order to remain competitive in this space, they had to reduce the expense ratio of QQQ, which is why they formed QQQM. If you're a believer in the NASDAQ 100 index, it would be wise to put your new dollars into QQQM instead of QQQ moving forward. If you were to put $100 into QQQ 10 years ago, you would have about $423 today. And just as a reference, if you were to put that same $100 into VU, the S&P 500, 10 years ago, you would have about $220. The S&P 500 crushes most actively managed portfolios over any 10 or 20-year stretch historically, but it has fallen well short of the NASDAQ 100 index in the 38 years since its inception. And I think that the NASDAQ 100 has some serious staying power. In this video, we will answer the following 5 questions regarding QQQM. What is QQQM? How is it managed? Who should buy it? What is the return history? And how does QQQM backtest versus VGT and SCHG? These are a couple other popular growth ETFs. What is QQQM? QQQM is the Invesco NASDAQ 100 ETF. It seeks to track the performance of the NASDAQ 100 index using a full replication strategy. And I love this because the performance of this ETF isn't going to fluctuate based on a manager's gut feelings, what they think is going to happen in the future. It is simply mirroring an index. And to provide a little more context here, the NASDAQ Composite is one of the 3 major indices, the other 2 being the S&P 500 and the Dow Jones. The NASDAQ Composite is a collection of over 2,500 stocks. The NASDAQ 100, which is what QQQM replicates, is the 100 largest stocks that are trading on the NASDAQ. However, it does exclude any stock from the financial sector. The NASDAQ 100 has crushed the returns of the S&P 500 since its inception 38 years ago. It has an annual return of over 15% during its lifetime. And it's only had negative returns for 7 of those 38 years, 3 of them being 2000, 2001, and 2002, which was the horrific .com crash. But even with that considered in all this weight, it still averages being up 15%, and it still has only had 7 of 38 down years. QQQM has a moderately low expense ratio of 0.15% or 15 basis points. This means that for every $10,000 that you have invested in QQQM, you pay $15 per year. How is QQQM managed? QQQM is passively managed, and it seeks to replicate the performance of the NASDAQ 100. It has over $14 billion of assets under management. The weighting of the top 5 holdings at any one time are not supposed to exceed 40% of the overall ETF. And the index is reconstituted annually in December to add and subtract the companies that make it up, and it's rebalanced quarterly, so 4 times a year. Who should buy QQQM? A quick note, this is not financial advice. Please always do your own research before making investment of any kind. I think that QQQM is a great investment for anyone in any stage because there's always room for a quality growth ETF, regardless of your situation. Now, full disclosure here, I personally hold VGT as my growth ETF, and it has had superior performance to QQQ over the last 3, 5, and 10 years, and it's also passively managed. However, I do have an easier time recommending QQQM to other people when they ask about a good ETF to invest in, because I feel it's a little more balanced, it covers more sectors, and it's based on a well-known and solid performing index. The returns are going to be a roller coaster compared to, say, the S&P 500 or a quality dividend ETF. But as you'll see in the next section, this roller coaster does ultimately go up more than it goes down over time, which creates superior returns. All right, and just to dive ahead of the commenter now, because I can just feel it coming. I know it's been a bull market in the past decade, but this is not performance chasing. Remember, the NASDAQ 100 has drastically outperformed the S&P 500 over a 38-year stretch. Now, this also includes the devastating tech bubble. I think the tech companies are here to stay, and because of that, I think that the NASDAQ 100, or the VGTs of the world, which is based on another small, mid, and large size tech-only index, is here to stay. So as far as your portfolio allocation to your growth ETF, whether you choose QQQM, SCHG, or VGT, I don't think anyone would call you crazy for putting in up to 50% of your portfolio as someone in your 20s or even 30s with a very high risk tolerance. Because over the long term, with all the ups and all the downs, you'll tend to come out ahead. However, if you're retired or close to retirement, it probably makes more sense to have some core funds like an S&P 500 fund or a total market index and some quality dividend ETFs mixed into your portfolio. I still think you'll want some growth ETF in your portfolio regardless of your age, but you'll just want to dial down the percentage based on your situation because it does bring volatility. Let's check out the return history of QQQM and see how it stacks up against the other quality growth ETFs. I pulled up QQQM on Seeking Alpha. I went to the holdings tab, and as you can see, about half of this ETF is technology. You do have about 16% communication, 14% consumer cyclical, about 7% healthcare, 7% consumer defensive, and then you have about 5% industrials. For the top 10 holdings, it's very similar to most of the other technology-based ETFs like VGT and SCHG. We have 11% Apple, 9% Microsoft, 5.5% Amazon, and then you have Nvidia, Meta, Google, Broadcom, Tesla, and PepsiCo, rounding out the top 10. And the top 10 holdings are about 48% of the ETF, so not too bad there. And it has a total of 104 holdings. That's 100 companies, a few of them having multiple share classes. I'm now going to switch this to QQQ because it has more history to look at the rest of the analytics we need to see. For example, the dividend summary. It has about a 0.59% dividend yield, and that's $2.15 per year on the trailing 12 months for every share that you hold. But the impressive thing here on dividends is its 5-year dividend growth rate is 10%. That's really good. That means around every 7 years, you'll double the per share dividend payment if that pace remains. All right, now the thing we came for, the return history. So I went to charting on Seeking Alpha. I'm going to add our comps here. Let's throw in VGT and let's throw in SCHG, which I hear people talking about a lot these days. Hit update chart here. We want our metric to be total return and not just price return. So we're going to add total return to include the dividends. And let's just start year to date. So far, year to date, QQQ is up 38%, VGT is only up 34%, and SCHG is also 34%. Over the last year, QQQ has a slight lead over VGT and a little bigger lead over SCHG, which comes in at 7%. If you zoom out 3 years, QQQ has returned 35%, VGT is at 41%, and SCHG is at 32%. When you zoom out 5 years, you're at 110% for QQQ, 129% for VGT, and 93% for SCHG. And when we zoom out 10 years, we're at 423% for QQQ, 496% for VGT, and 305% for SCHG. All right, now that we know the basic return history of QQQM and we can see that it's a quality ETF, let's do a back test scenario here to see how it's performed in the past. And again, just a reminder, I will be using QQQ, which uses the exact same index, the NASDAQ 100, to show this past performance. We're out here on Portfolio Visualizer, and I love to use this website for back testing different scenarios. We're going to grab the last 10 years, so 14 through 23, with year-to-date ARN, almost 10 years. We're starting with $10,000 and contributing $500 a month, and we're going to do dividend reinvesting ARN. We're going to use the benchmark of the Vanguard S&P 500 index, and we're looking at QQQ, VGT, and SCHG to see how they stack up. So when we hit analyze here, and we go down, there's QQQ, VGT, SCHG. Here's our summarized scorecard. So you can see we have our initial balance here. It looks like VGT would end with 220,000 to Triple Q's 190K. SCHG would have had 162, and they all crushed the S&P 500 over the last 10 years, which would be 135. And we're going to dive into some more of these metrics. Let's move on to portfolio growth. And as you can see, the market trends in a similar direction. They all go up, they all go down together. That's just, generally speaking, how it works. And then usually tech-heavy ETFs take bigger dives and bigger jumps up over the last 40, 50 years. But everything trends together for the most part. And as you can see, they're all crushing the S&P 500 and looking pretty good. VGT is the clear winner, however. Now, when we come down to annual returns, this shows year-by-year total returns. QQQ is the blue one here. You can see it reigned supreme in 14 and 15. And then it had a little trouble in 16. But over the years, it's been one of the solid ones. Here it was basically flat. And you can see it's usually second place, first place. It's a very solid growth ETF. Had a rough one here, but they all did. And so far this year, QQQ is number one. So the 3-year annualized return for QQQ was almost 14%. VGT was up there at 16%, and SCHG was a solid 13%. Now the S&P 500 is actually ahead of SCHG at 13.5%. Over the last 5 years, you have 21% for VGT, almost 18% for Triple Q, and then SCHG did beat the market over that time frame. And over the full, basically 10 years, you have almost 18% for QQQ, almost 20% for VGT, 15% for SCHG, and about 12% for the market. I hope this video helped you understand QQQM more and why it's a great investment option. Now it's time to put what you learned into practice. If you want to build your own 3-fund portfolio, one that's beat the market for each of the last 10 years, check out this video over here. Or check out this video over here if you think that the YouTube algorithm holds the key to your heart. Thank you for watching, have a wonderful day, and I will see you in the next video. Peace.